Hello and welcome to Crux Investor. We spoke earlier today to Gavin Lockyer, who's the MD of Arafura Resources. They're an ASX-listed rare earths mining company with assets in Australia. And if you want our thoughts and opinions on the conversation and indeed the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports, commentary from market experts from around the world on a variety of commodities and companies. There's also training videos. There are summaries of other interviews that we've done just to save you a bit of time. And of course, there's a thriving community of investors on there sharing their thoughts and ideas with each other. So go along now and sign up for cruxinvestor.com/club. Of course, we'd love your feedback too. So do give us a like, leave your comments below. And if you want to see what we talked about today, take a look in the description below. Gavin, how you doing, sir?
I'm good, thanks. How are you going?
Not too bad, mate. Not too bad. But I'm not sitting here in the sunshine like you. How are things over there?
That's true. Yeah, look, we're quite lucky here in Perth, Western Australia. We've been able to walk around quite freely for quite a period of time. So, yeah, much better off than other parts of the world.
For sure. Is it barbecue weather yet?
It's getting there. It was on the weekend, but it's raining now.
Good, I feel better. Right, so Gavin, we've not spoken before and we've not heard the Arafura story before either, so I'm looking forward to it. But can you kick off, first of all, with just a 1-minute overview of the business, then we can pick it up from there?
Sure. Look, Arafura is developing the Nolans Rare Earth Mine, which is in Central Australia, in the Northern Territory of Australia. And rare earth mines are not all the same, as I'm sure many of your viewers would know. Ours is particularly good because it's enriched in NdPr, or neodymium praseodymium. And these are really the building blocks of high-performance, powerful magnets that are critical to e-mobility and renewables. And obviously, with COVID highlighting a heap of issues and a lot of economies looking to grow their businesses out of COVID using renewables and e-mobility, we see that we're going to hit a sweet spot in the marketplace fairly soon.
Okay, hoping to time the market right. So, I mean, how long have you been at this?
Look, the company was listed in 2003, but and that sounds like it's a long time for just to get to the phase where we're at, which is completion of feasibility study. But the reality is that not any two projects are the same, and 95% of all projects are based in China, and exchange of information is extremely tough and extremely tight, as they've always wanted to control the market. So we've done a lot of R&D. We've been developing our flow sheet over a number of years, and that accumulated in our feasibility study being released in February 2019.
Yeah, yes, I saw the DFS. I mean, I'm just interested in this because, again, for people new to this, sometimes you don't appreciate how long these things can take. So what were you doing for the last 17 years in terms of moving things forward?
Well, obviously, there's your exploration phase, which for us, like any junior explorer, it's about trying to tap the market. You do a bit of drilling, you find a bit, you go back to the market, do a bit more. So that was probably, we've probably spent about 200 million Aussie dollars on the project to date, and probably about 50 million of that would be in drilling. The rest of it has just been in metallurgy and hydrometallurgy and unlocking the flow sheet in the best, most efficient manner that we can. So lots of test work, lots of piloting, lots of activities in that regard, including our environmental approvals.
Okay, 200 million. What's your market cap today?
It's about 100 million at the moment.
Right, okay. So you've got a bit of catching up to do there in terms of moving this thing forward, right? And then when you do move it forward,
definitely.
You've still got a bit of catching up to do. So maybe we should talk about what you have, where you are today. You talked about the DFS that you did in 2019, obviously, and the EIA you mentioned there. So have you got everything that you need in place to be able to have constructive conversations around financing? Is there going to be any holdups?
Definitely not. No, look, all the technical aspects of the project are absolutely nailed. We have, as I said, environmental approvals. We've got our mining licenses granted. Our focus right now is all around offtake and sales agreements, discussions with financiers and potential strategic partners.
Okay, can you just talk to me around some of the numbers on the DFS, just to remind people kind of what this project looks like in terms of, payback, costs, capex, etc.?
Yeah, look, like all rare earth projects, they're quite capital intensive. So our capital cost is around 1 billion Australian dollars. Obviously, that's a big jump from a market cap of 100 million. But what we have managed to do through all our test programs is actually unlock the natural geology of our ore body. It's hosted in a phosphate ore body. So we actually are able to extract that phosphate as a phosphoric acid, which gives us a revenue credit against our neodymium, praseodymium oxide operating cost. And what that actually translates to in dollars and cents is around an operating cost of about US $25 a kilogram, which we believe puts us in the lowest cost quartile of any producer in the world, including the Chinese. And that's important because, as I said, China controls this market. It's got about 95% of global production. And obviously, if you're going to try and compete and take customer share away from China, you need to be able to prove that you can do it in an efficient manner. The other natural advantage of Nolans is it's a really, really big deposit. We've got at least 40 years life of mine, and it's open at depth. So it can, I speak to my geos and they tell me, this will be mined by their grandchildren. But of course, under the JORC regulations, we can only state that we have a 40-year life of mine. So,
okay, so let's break that down again, just to help people understand where you're at and some of the battles you may be having internally in terms of how you go forward. Because $1 billion, anything's quite big, but $1 billion Aussie, there's a big chunk of change. What are the barriers that you're coming up against? Because you're going to look at different ways of structuring that, I'm sure. But even no matter what you call that money, people are going to be looking for, certainty from you. So the DFS is one thing, the metallurgy is, they're going to need to understand that. But ultimately, they're going to want to see that following the pilot, you are successfully putting offtake agreements together. So where are you in the process?
Yep. Look, and you touched on the pilot again, and it's probably worth explaining. We actually have piloted at a significant scale, and that is as a result of other rare earth companies outside of China that have tried to get into operation, and we've tried to learn from their mistakes, and therefore one of those things was to try and de-risk the project from a technical perspective as much as we could. So we took over a year of piloting at scale, where we took 12 tons of material, put it through the various units of operations, and most recently we have produced a rare earth oxide product that was on specification, which we could then send off to our potential customers for qualification. And that leads into the second part of the first part of your question, which was around where do we sit. So we don't want to compete with China head on. China has made very clear a China made in China 2025 strategy, where it wants to be the world's leader of EVs and EV components. And they are the only country in the world that can currently go from what we say mine to magnet. They have the entire supply chain. Now, we aren't going to go all the way to a magnet. We are producing a rare earth oxide, which is an intermediate product, which then has to be converted to a metal alloy magnet component electric vehicle. So what we have done in terms of our offtake, we have targeted some tier one Chinese magnet manufacturers who have existing large export businesses back out of China into EU, Korea, Japan, and the US in the first instance. And then as we've slowly built up our engagement and our network in the marketplace, we are now also talking to ultimate end users, so automakers, auto component makers, wind turbine makers globally, but predominantly in Europe and Southeast Asia for potential offtake of material. And so our long-winded answer to your question, but it's critical to our funding strategy. So it's probably worth taking some time here, because what we are endeavouring to do is saying to those customers, look, we will deliver our rare earth oxide to your preferred magnet supplier and have it toll treated, and then it will end up into your product. And that gives the supplier, and the European customers are particularly really big around ESG components of their supply chains at the moment. So we give them provenance of supply from Australia through their preferred supplier of magnet or component, and then back into those markets. So we're at varying degrees of discussions and offtake discussions with those customers. All of them are non-binding at this point in time, and we are working through a process, hopefully that we get some more binding contracts in place in the very near term, because as I said, it's critical to our debt funding strategy.
Okay, I mean, companies at your stage are always talking to anyone who will talk to them, right? So I guess what I'm trying to get at is, what's your precise plan? Because I noticed like phrases in your PowerPoint, like China's denying capital for new development, China threatening to restrict rare earth supply. And you've got the Australian government at loggerheads with the Chinese government, and you've got the Chinese saying, made in China effectively. How do you square up talking to the Chinese now in that scenario?
Well, as I said, the groups that we're talking to in China, they're actually concerned about their own rare earth, their own market, their own customers, because they are not necessarily aligned with the Made in China 2025 strategy. Their existing customer base sits outside China, and they are concerned that they might not be able to get raw material, which we can provide for their existing customer base. So that's how we can justify that. The other thing, when we're talking with governments in particular, and you mentioned the Australian government that we've been working with on the critical minerals side of things, they understand that there's parts of the processing flow sheet that aren't done anywhere else. And so by necessity, the rest of the world, even if they don't like it, will have to go through China at a point in time. And we're trying to minimize the impact of material going into China and then being sort of absorbed in China domestic consumption.
Okay, so tell me a bit more about the conversations, because you got no binding contracts at the moment. Okay, there's no binding offtakes at all. Mm-hmm. How long have you been at it?
Earnestly, probably about 8 months now, in terms of sitting down, offering, exchanging terms, and so on and so forth. But we've been talking with customers for a long, long time, because we knew ultimately that our customer was going to be a long way away. The customer with a balance sheet, I should say, which is what we're dependent on to get our funding, is a long way away from a mine in Central Australia. And so we've been, over many, many years, talking to customers all around the world, large organisations. You would know, you probably drive one of their vehicles, and making sure that they understand this is what's coming. And as I said, COVID has really highlighted it. For instance, in March, I think the Volkswagen factory in Wolfsburg had to close ahead of Germany shutting down for COVID. And the reason was they couldn't get rare earth magnets out of their factories in China to go into their electric cars. So COVID has highlighted something that's always been there. It's just we're hopeful that these off-taking discussions that we've been having for a long time now become a bit more escalated as some of these end users see the urgency around them.
Okay, and because there's again, I just need you to help me understand the process that you're planning. Okay, so there's off-take agreements, which is one thing. And then there's $1 billion, which you're going to need to go and find from somewhere, okay? So the offtake is just an agreement to agree that you're going to supply them some stuff for down the line when you're producing, right? So is there any money from the offtake side? Are people talking about helping you in any way, just on that side of things?
There may be some discussions that occur where if they want certainty of supply, where they could help us out is maybe take an equity position in the company. Yes, definitely. What we are more focused on is probably trying to keep it more financial, where there might be a floor price in there that suits a debt arranger or a debt provider. But this isn't going to be a traditional debt arrangement. So we're focused on export credit agencies, obviously strategic material going into strategic businesses within Europe, Japan, Korea, for instance, they're our biggest markets. Therefore, their export credit agencies should be able to support. And one of the things the Australian government has done recently is announce funding to be set aside into our own export credit agencies to help with critical mineral supplies. So we are hopeful, and we're going through a due diligence process as we speak with various Australian government agencies, which we think will be able to offer us, significant chunks of debt for long tenor at low interest rates, which will then hopefully attract those other ECAs from afar as well, combined with an offtake agreement for a customer in that jurisdiction.
I mean, break that down for me, because Australian government, offtake and equipment procurement, you've got export credit agencies, commercial bank. They all want different things in this mix, and they all need to have, security or at least comfort by other people doing things. So who needs to go first in this process so the chain works?
It's the biggest chicken and egg argument that is out there, because the off-taker wants to see some certainty that you're going to get your funding. The debt financier wants to see certainty that you're going to be able to repay the debt through your off-take. And then you've got equity sitting here saying, well, we'll come in late, but we want you to spend the bank's debt first. So we are juggling all three of those at the same time. And, which one goes first, we're not too sure. But one of the things we have been doing a lot of lately is saying to the Australian government in particular, look, you've made public statements that this is a critical mineral, that you need it to assist your allies and our allies in securing supply chain. You can't just sit back and be the gap funder or the lender of last resort. We're looking for you to get on the front foot and help drive it here. And it may all come together at the same time, but somebody's got to take the lead.
But it's such a big amount that you're looking for. It's not like the Australian government, state or federal, is going to come in and underwrite this thing for you. So you're going to have to take control of this situation yourself. So when do you think you're going to be able to get some of these off-takers across the line, and what percentage of your production are you trying to get covered with an off-take to enable the first person in this queue to deliver you at 1 billion if feels comfortable?
There's two aspects to the answer to that question. The first is we probably need about 75 to 80%, I would expect, of our offtake locked away in some sort of fixed contract. And no, the Australian government's not going to cough up $1 billion, or even if it was 50% debt, they're not going to cough up 500 million. But what they may be is a cornerstone for others to come in. I'll give you a real example. And the only other, there were two rare earth mines operating outside of China. One is Mountain Pass in California, and the other one is Lynas Corporation, who operate out of Australia/Malaysia, right? Now, last time there was geopolitical tension in the rare earth space, China stopped export of material to Japan. Japan panicked. The Japanese government stepped in, funded a debt component for Lynas, and Lynas ultimately raised the rest of their capital and built their plant. Now their plant is similar size to ours. It's as in terms of where their market cap was and where it is now. It's a similar story, and that was all done on the back of government funding.
Okay, and
for $1 billion project.
Right, and what's Plan B? Because the Australian government aren't the Japanese government. Times are tough. There's a lot of debt out there. There's a lot of mining companies probably asking for the same thing. So if they don't step in, what's Plan B for you?
Well, I'm confident that they will, but if they don't step in, I'm certain that there's other ECAs out there with, as I said, customers in those jurisdictions that will step into the breach. What what we have had feedback from those other ECAs is that, the Australian government has made public statement that there is money available for critical minerals.
For how much?
And yet,
how much?
Well, there's a $4 billion defence fund that they've made available. There was a $4 billion amount sitting in in the Northern Australian Infrastructure Fund. So there's a significant pool of money that they see there as being one part of their COVID recovery into industries that are assisting the critical mineral supply chain. And there's very few projects in Australia that are shovel ready like Arafura is. So I'd be very surprised if we didn't get any support.
Right, but that 4 billion is going to be, there's been a lot of hands out for that 4 billion. It gets split up a number of ways, and whether or not you get any, there's no certainty around that at the moment. So you're saying there are conversations which are going on, and your hope is that will be the case. And if you do get that, then who's the next person you go and talk to and say, look, we've got this?
Well, it's not really the next person. It's people we're speaking to in conjunction with. And as I said, it's the ECAs in our major trading partners that we're talking to and having quite good conversations with at this point in time, along with also the offtake customers. And don't forget, these offtake customers they're big organisations. They're global, so they have balance sheet as well. So. I wouldn't rule out any sort of involvement in our funding strategy by them.
I know that people are more aware now of critical mineral lists, but they've always been there. They've been there for decades, right? But we're just slightly more aware because the whole battery of evolution at the moment. I think people are starting to talk that language now for sure. But there's a lot of hands out. There's a lot of people asking for this money. Do you think that, because what we're seeing around the world, the global economies, there have been, shutdowns in the automotive manufacturing sector. There have been incentives put in place to try and, get things going again. Do you think you're just in a wait and see moment? Because, it's kind of a boring phase, this DFS stuff, isn't it? People are waiting around. You've done everything you need to do, haven't you?
Yeah, public statements by all the let's focus on BMW and let's say Volkswagen, two of the largest automakers in the world. Both of them have advanced their e-mobility platforms, where they pre-COVID were saying we're moving to full electric in the next 5 to 10 years. They're now saying we're moving to full electric within the next 3 to 5. Now, that's just repeated over and over again at every automaker that you can think of. And this is public statements by them, not me. Now, for that to happen, we have roughly a 3-year construction period. And if they want to be fully electric in 3 years' time, then they need to be speaking to us now. And so it may have been a wait and see 6 months ago, but I think it's absolutely no longer a wait and see. And you're seeing some of the auto sector making investments into lithium and graphite and cobalt, etc. And I think now that they get their battery cost under control, I think the next suite of minerals off the rank should be neodymium, praseodymium.
But tell me the difference between neodymium, praseodymium, and nickel and lithium and graphite and all the other commodities which go into a battery, who are all saying the same thing as you. We need to get going now, or you're going to be running out. Look at that supply-demand curve. 3 years, 4 years, 5 years' time, there isn't going to be what you need to put in place. So why is the money going to come to you versus them?
Well, I think because I think most of the auto sector's got their battery minerals, battery supply chain sorted, and I think they're quite mainstream minerals, to be perfectly honest. There's existing processing for lithium, graphite, copper, nickel, you name it, cobalt. But for rare earths, the supply chain's basically out of China. And there is no real production outside of China. And China doesn't want to be the world's miner and raw material provider. It wants to be the world's number one EV provider. And when when the auto sector employs 13% of the population in Germany, that's a lot of people out of work if all those jobs go to China. And this isn't being anti-Chinese. This is just a fact. And so that's why I think ours is different, because there is very few projects globally that are ready to go, that are fully permitted, and basically awaiting finance to be able to significantly feed into the supply chain. When we're in production, we'll supply between 5 and 10% of the magnet feed material required. Now, that's quite a lot, even though it's a small market. So,
yeah, that's true. So here's one for you. Gold has been flying for the last year. All the money is going into gold. Well, precious metals generally, right? Some of the returns are fantastic. So not just retail, but funds, institutions are looking there. I mean, has that been part of your problem? And if so, do you think a Joe Biden government is going to be good for you? Are people going to feel a little bit more comfortable?
Look, I don't think so. I think if funds are putting money into gold, then it's more of a currency play rather than I think a critical minerals play. Don't get me wrong, I love gold.
I wasn't suggesting critical minerals, but in terms of safe haven, you look at the economy, you look at the debt packages, quantitative easing around the world. People are looking at gold and silver. That was my point. But but it possibly being to the detriment of money going into battery metals.
Look, you partly could be right there. I think people obviously been looking for stability in an unstable world. But what we are also seeing is a lot of the funds globally are starting to look at the next wave, like green energy, green technologies, e-mobility, and funds are looking at companies that have got a strong ESG profile and footprint, and so on and so forth. So I think you're actually going to see a different wave of investor coming through, and I think Biden's probably going to just enhance that with his climate change stance and policies.
Right. Okay. So I'm sorry to make this entire interview about financing, but that's what you've done everything, right? The financing is the thing that people keep sending questions in about or asking, and want an idea of where you're at with that. So you've got various conversations going on with, export credit agencies. You've got your offtake stuff going on, obviously, which may not necessarily be cash in, but it gives certainty down the line. The cost of this money, you're showing a sort of just over 17% IRR. You're showing a 5-year payback. Again, in today's environment, is that attractive? To generalist investors, to these funds, when there are better return profiles out there? And does it then give us a clue to the sorts of people and the sorts of money that you're going to need to go and talk to?
There's a number of aspects to that as well. I think, the ECA funding generally comes with lower interest rates and longer tenor. After that 5-year payback, this thing's generating about 300 million odd free cash year on year for 30 odd years. So that's a pretty strong return after the initial payback, albeit that I take it your point that the IRRs are modest, if anything. So I think that if you're for an investor that wants in and out, I think the next sort of value change from our stock now, which is currently, let's say, 10 cents Australian per share, I think when we start making announcements around offtake and getting some certainty of funding, I think that will be a significant re-rating point. And we would hope at that point in time, then we could attract the equity that's required for the whatever percentage of the $1 billion it might be. And then I think we'll go through another hiatus where we'll be through construction, commissioning, et cetera, until we're basically into production. So I think that's sort of the share price curve for the next little while. I think too, I repeat the value proposition that where Lynas was before their funding, Lynas is now a $2 billion Australian company. I don't see why we couldn't do something similar or replicate that sort of profile. So, the cost of funds, I think we'll be able to manage and get what we need to in a cost-effective way. But I think that's why it's got to be ECA led, because I don't think a commercial lending arrangement would certainly stack up with the numbers.
And do you see this as kind of conventional, 70-30 type splits? Is that, you're not seeing any reason to discount that?
I know our numbers say that we could support a 60% debt, but I'm not sure that that's likely to be reasonable in this environment. But we'll see how we go. We've actually appointed a financial advisor at the moment, who, for confidentiality, I can't really state their name at the moment, but they'd be a global investment bank, and they are assisting us with all that sort of modelling, and also being intermediary to the ECAs in terms of making sure that any term sheets that we're pulling together are meaningful from a banking perspective.
Okay. Do you think you have got a good enough marketing team? Are you talking to all the right off-takers? Are you going to be able to get a binding contract soon? I mean, what sort of timeline are we looking at to get something over the line? Is it this side of Christmas?
Look, no, I doubt whether we have something binding this side of Christmas, but certainly, we're targeting middle of next year for FID. So if that answers your question.
Yeah, it's an answer. For sure. Look, I get it. It's hard to know when people will pull the trigger on these things, for sure. But the question is, do you feel you're in the right rooms? Yeah,
I do. I think we're dealing with either tier one magnet producers or EV or renewable component manufacturers or motor manufacturers themselves or electric vehicle producers. So I think we've got it covered off, and I think from a geographical perspective, we've got most of the world covered off as well. So,
do you wish you kind of started smaller instead of $1 billion deal?
Look, yeah, we definitely did look at that. It's just the sheer logistics, because we're in Central Australia. There's not much difference if we, cut down the size of the plant by half. We don't actually save half the capex. So we have done those the scalability design discussions, but we also think that for a reasonable investment, you also need to have a reasonable volume. And if we're going to attract big customers, we need to have substance in being able to deliver volume to meet their aspirations. So we think we've got it about right.
And what were the conversations with regards to moving further downstream? Obviously, at $1 billion, you probably thought, crikey, let's just get this thing over the line. But there must have been an option about capturing value down the chain, because you're going to see more margin if you've done that. But of course, you'd be raising a lot more money.
We actually we've gone both ways. We've actually looked at whether we could just dig it up and ship it out, which is what a number of other companies are looking at. Now, we believe that once you do that, it would be very difficult to break, because that material would have to go to China. And I think it'd be pretty tough once you got locked into that sort of a model to be able to raise the capital needed to build the big plant, because the extraction plant is the big cost. It's not the digging it up. That's 15% of our OPEX and CAPEX. It's nothing. But the real value add is once you've separated those rare earths into an oxide. So we figured, let's go to an oxide. That's at least an entry point where we don't necessarily have to send material to China. We've got other options. Do we go to a metal or an alloy or something else? We've also looked at some of that, but the magnets in particular are probably a little bit one step too far. Metal and alloying is typically a energy intensive process. Australia is not typically a energy efficient or cost effective place to do that. Would we look at doing something with another group in a cheaper jurisdiction? Absolutely. And in fact, some of the magnet companies we're talking to have actually, excuse me, looked at building tolling plants outside of China, so that they can actually take feedstock and keep it outside. So.
That would be a really interesting conversation, because, as you say, after 5 years, you're throwing off a lot of cash. You've got a bit more optionality at that point. So you're not discounting that or removing that from the table. That's a real valuation at the time. Okay, that's interesting. I guess that's how people like Lynas and Mountain Pass do it.
I think we've got to, there's an argument, strong argument to say, well, you could take it those next steps, but we're $1 billion capital already. Let's crawl before we walk.
I couldn't agree more. Gavin, thank you very much for that run through. Appreciate getting an insight into the challenges you're facing, how you're addressing them, and what this thing looks like going forward. Stay in touch and let us know how you're getting on, okay?
Absolutely. Thank you very much for having me.